Ladies and gentlemen, stocks can only be light green, mint green, normal green, ooze green, forest green, dark green, or lightsaber green, but we can never ever be red. So if you could please call your local bear, tell him to subscribe to FinFluential Television or FinFluential Media, either or, because I am providing perma bear therapy free for the next 24 hours. We accept all stray bears and bears of all ages. Also, we got a couple of peace deals, a couple of trade deals. The market's back at all-time highs. So we've got a lot to talk about today, guys. Let's roll the tape. Welcome, everybody, to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks moved higher to clinch more record highs on Wednesday as optimism over US trade deals rose at the same time that more signs of an intensifying labor market slowdown bolstered the case for the Federal Reserve to start cutting interest rates. And guys, it was a broadly green day, but not without some red. There definitely was some red. The biggest red here today, the biggest sectors that were down were like healthcare plans. We're going to talk about why that is the case. It has to do with the big, beautiful bill. But all in all, healthcare was fairly green. Medical devices was also red, but the rest of healthcare pretty green. Financials, very similar situation. Berkshire Hathaway was down nearly 2%. Insurance stocks were down in a very big way, but we did see stuff like JP Morgan, asset management be very, very green. Tesla was up 4%, and we'll talk about why a little later on in the video. Apple was up 2%. Market really coming along with Apple, and semiconductors was very, very green today. Nvidia led the pack along with ABGO, AMD, Qualcomm, Texas Instruments. You can also see here that semiconductor hardware equipment manufacturers were also very, very green across the board. But other than that, it was mixed price action through and through the market. You could see that the winners today was stuff like XLE, XLB, XLK, XLY, technology, discretionary, a couple of the commodity producers, with gold up 0.55% and the S&P 500 gaining 0.45%. We also saw staples, real estate, and industrials gain ever so slightly. And then what weighed on the markets today was financials, communication services, utilities, and healthcare. The healthcare being the worst, down just shy of 1%. But net, the markets, opened somewhat down and then sort of gained steam as the day went on, closing at the highs and a new all-time high for the S&P 500. But this is the large cap space. When you break it down into the factor and size segment, what you see that small caps were very, very bullish. And this has been the theme and something that I've said for the last probably 3 or 4 weeks now, that we're going to see a rotation, especially as we get rate cuts, this big, beautiful bill, easing monetary policy. As all of that comes to fruition, small caps will outperform. And we're starting to see that across the board, value core growth outperforming the market as a whole. And we also saw mid caps outperform large caps, with only large cap value being the only factor segment here in the red, down 0.007%. But look, net, it was a very good day for US equities, and globally, it was a great day as well. North America was very green. Europe was very green. Asia was actually very green. It was just Southeast Asia and India that really weighed on the market as a whole. But other than that, pretty green day across the board, except for a couple of geographies. And all of this stemmed off a couple of trade deals we got that Donald Trump announced. Now, Donald Trump announced a US trade pact with Vietnam, and I'm going to say this is probably one of the best trade deals Donald Trump could have ever announced. Now, previously, the tariff with Vietnam was 46%. This figure is now going to be 20%. A 40% tariff on transshipments, in other words, goods going through other countries. To avoid this tariff, will be taxed at 40%, right? Vietnam will also provide the United States with more market access, and US exports to Vietnam will have no tariff. That's the trade deal. That's it. So pretty much Vietnam is going to pay a tariff, 20% direct from Vietnam, 40% for transshipments. They're going to open their market up to the US, and that's virtually it. So it just goes to show the leverage the United States has over Vietnam for them to agree with this. This is an exceptional trade deal. It's not going too well for other countries. Japan apparently is holding steadfast They're very hard to deal with. Trump came out and said he's not sure they're going to make a deal with Japan and they may be forced to pay 30 or 35% as the deadline looms. But ultimately, what drove market momentum with the trade deal front was this deal from Vietnam. This was actually an exceptional trade deal from Donald Trump and his team. But look, it wasn't all sunshine and rainbows. If we're actually looking at the ADP employment change, which is just private payrolls, this came in at negative 33,000, right? Versus the consensus of 95,000. So a huge miss. You can see this is what it looks like. The forecast was for 98,000. It was actually the first time we saw a decrease in payrolls going back to 2023. Now, part of the reason why the market looks past this is because ADP is actually losing a ton of market share every single month, every single year to incumbents like Paychex as well as Paycom. It could be something along the lines where it's mid-year, change of the financial year in most countries, and they could be swapping their payroll providers. And this is why we actually saw, nonetheless, this is an ominous sign. And it's definitely something we need to be paying attention to tomorrow and for the end of the week as we get the non-farm numbers. Now, looking at some market movers after the Vietnam trade deal, Nike was up 4%. And again, this is after being up 17% last week on its earnings. So Nike seeing a bit of life, up 4% on this trade deal. The market really, really loves what they're seeing from Nike right now. Tesla was up 5% after the relationship between Elon Musk and Donald Trump started to ease. They're back to being friends again. Musk gave Trump some credit when it came to what's happening in the Middle East. Apparently, there's an Israel-Gaza ceasefire that's going on for 60 days as brokered by Trump. Musk gave him credit for this, and as a result, Tesla stock was up 5%. Very, very erratic. And then United Health and the insurers as a whole was down 5.6%. And that's because the big, beautiful bill is gutting federal health spending over the next decade. Some of the smaller names like Oscar Health are down like 17%. Elevance Health is down as well. United Health are down in a very big way. And I think this is going to weigh on this sector as a whole. And then for everything we saw today, guys, there was great breadth, 4,400 advances, 1,900 decliners. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, the S&P 500 green, up 0.5 percentage point today, and market momentum continues to remain solid. Everything from the 5-day to the 200-day above the 50% mark. And when you get this type of price action, pullbacks tend to be very, very shallow, and we just keep making new all-time highs. Now, guys, looking at the charts, you can see a very bullish day across the board. The S&P 500 and the Nasdaq 100 are up 0.47 and 0.73%. The RSP only up 0.23%, so really concentrated in these larger cap names, but still a green day net. But the biggest and best performer was the IWM, mid caps and small caps, all gaining in excess of 1%. A very, very solid day. And the IWM up 1.4%. Very, very solid. Growth outperformed value, but both were still green on the day. Futures officially turned over to the new day. You can see a little bit reddier in the after hours, but inconsequential. European stocks were flat. Middle Eastern stocks were up in a very big way. Australian stocks were flat. Chinese stocks were down 1.25%. And volatility ticked down, guys. Volatility here at 16. I was looking at some call and put premiums, looking to sell some puts, and they're not looking pretty right now. So the market, really not seeing a whole lot of volatility. And oftentimes that means, the markets have very, very shallow pullbacks and they just keep ripping to the upside. And it's typical mid-cycle price action coming off a strong low. The exact, type of price action we've seen here in the S&P 500. Now, on the back of the economic data that we got today, we saw some very weird price action. The two-year, 10-year, and 30-year yield rose, and the dollar also gained. This is something I've been talking about for a while. I'm a bit of a contrarian against the consensus. The consensus is for the dollar to go lower. I think we're going to see a little bit of strength in the dollar here into the second half of the year. TLT was down as a result of what we saw in yields. But again, yields have been, stair-stepping lower for the last 2 to 3 weeks. This price action right here, it's nothing really big. I think maybe just a little bit of a reprieve. And then Bitcoin was up 3.4%. Onward and upward. We'll talk about Bitcoin. Ethereum was up 7.89%, guys. Very, very strong day for crypto. Flat day here for gold. Silver was kind of flat. WTI was flat. Commodities just flat as a whole in aggregate. But I think this is actually the change in gold. Let's actually go ahead, quickly have a look at the day in gold. Gold was actually up 0.07, but that is the CFD. Let's actually go ahead and look at the GLD. That's a much better aggregate for what happened in the day today. Up 0.55%. So that's just gold, kicking the day off. on a green note. But let's actually go ahead, talk about the S&P 500. Let's go ahead, shrink this. So as you can see, guys, S&P 500, new all-time highs, another all-time high. And you can see right here, we are at the top end of the range in the S&P 500. This is the core wall. We're at the top end of the core wall. Oftentimes, when we do get to this top end here, we do see a little bit of downside, especially when the core wall doesn't move up. To further support that view, if we look at the RSI, right, you can see the RSI right here is at the overbought territory. And normally when we do get to this overbought territory, we do see a little bit of downside. But again, we're not looking for anything major, just a minor pullback, possibly to as low as the 60-28 area, and then we'll go from there. But this market continues to outperform. And guys, what I do want to state is that I am bullish, and any dip we do get, you do want to buy that dip. However, if the core wall does move up, that does mean further upside. But coming into this week, we said we're looking for a little bit of upside to the core wall. We exactly got that. Now we're going to look for a little bit of downside, especially as we de-risk into the shortened trading week, guys. 4th of July, the market is not open. Coupled with the fact that the RSI is in overbought territory, we probably will see a little bit of downside tomorrow, maybe even a flat day, unless the core wall moves up. Very similar situation with the NASDAQ 100. We're not quite at the top end of the range, but we are there slightly in overbought territory. Do expect a little bit of reprieve from the market. And then I think the RTY as well, you know, we're actually above the core wall, as you can see right here at overbought territory. I wouldn't be surprised if we get a little bit of a red day here for the Russell 2000. And I do expect the Russell 2000 to continue to move higher. But again, guys, if we do get a dip, buy those dips, because dips are shallow in this market, particularly in the month of July. The month of July is very, very bullish, especially the 2-week period we're in. And the price action we've seen, we've been telegraphing that for the last couple of weeks. We said we're going to move higher into the first 2 weeks. We may get a little bit of a pullback tomorrow, better de-risking, but I expect next week for us to continue to move higher as well. You know, I am here in both the short term, the mid-term, and longer term. I am bullish on the markets. And guys, when we look at the weekly chart, everything is looking very, very good. In fact, if we go here to the RSI, put up the relative strength index on the weekly chart, we're not yet overbought. So we can definitely still move higher in this market. And something else I want you guys to pay attention to, right, is actually the earnings per share estimates for the S&P 500. Guys, earnings per share estimates right here for next year were close to $268 in earnings per share, right? That's why the market actually fell. At the highs right here, earnings per share was about $278. So, you know, exuberant earnings per share. Tariffs came in. The market thought we were going to have that for earnings per share. Now we're looking at earnings per share estimates for the next 12 months at about $285, somewhere in that region. This is why we're making new highs, because earnings estimates continue to march higher. Coupled with the fact that it looks like we're going to get rate cuts. We got the economic data to support rate cuts today. Oftentimes, in this type of market environment, you're going to see markets move higher, large caps, mid caps, small caps, with outperformance coming from small caps as well. I think, you know, today's data was probably the real data point we needed to possibly bring rate cuts to the front of mind in July for the FOMC. But we'll see how we go. Let's quickly have a look at gold. Gold was up today. Very, very weird price action across the board. And we said yesterday that we're trading inside this range right here. And I think we're going to continue to do that. And a break to the upside or the downside will determine where we go next. I think we're definitely going to see a break to the upside. But guys, I don't really like holding gold. What I really want to hold is Bitcoin. Bitcoin, we said we were trading in this range. It's broken above it. And we knew this was coming because I said it. You want to remain cautiously long. Why? Why was that the case? It has to do with M2 money supply. You can see here that Bitcoin follows M2 money supply lag between 80 to 100 days to a T. And even though we did see a little bit of consolidation here, which is completely normal, because that's what Bitcoin was telling us, we were going to get a little bit of consolidation. We got that consolidation, and now we're going to move higher. I am heavily exposed to Bitcoin. I think it's something like 15% of my portfolio, which is pretty big. It's a pretty big position in my portfolio, and I do think we're going to see at minimum the 130,000 mark, but M2 money supply continues to make all-time highs. Looks like we're going to go to the 140,000 mark. Guys, great place to start selling puts right here in the money puts for us to move higher. Otherwise, just buy equity, buy something like IBIT or BITX. Bitcoin will move higher, up 3% today. And Bitcoin goes on these explosive moves, right? You could see that when we consolidate, right? Explosive move. Consolidate, explosive move. To the downside, consolidate, explosive move. We just had we had a consolidation period right here for a good number of weeks. And now we're going to go to the upside. And now why we're not going to go down is because M2 money supply is telling us we're going to go up. So guys, remember, we're not And look, we may diverge, as you can see right here. We do diverge a lot, but ultimately we follow the path. And right now the path is telling us higher. Now, guys, quickly looking at two stocks that I think are great buys right now. The first one is NBIS. The stock has had a little bit of a pullback in the last week. You can see here it's forming a consolidation period. I think if you can get this under $50, right, there's strong support from the highs right here. This probably will go ahead and take out the $84 region. Another stock I really do like, Evolution AB. I've been in this one for quite a while, and I do think we're officially at the turnaround juncture right here. Evolution is up 0.83%. It's up about 18% in the last month, and I do think we're going to go ahead and close the $86 area. I think we're going to do that in very short notice. So buy Evolution, buy NBIS. Evolution is more long duration. NBIS is more short to medium term. Guys, and diving into sentiment, this is Goldman Sachs US Equity Sentiment Indicator, which combines 9 measures of positioning across institutional, retail, and foreign investors, and has historically been a statistically significant signal for near-term S&P 500 returns. And guys, you can see that we are at 0.1, just at the equilibrium zone. So we're not in light positioning, we're not in stretch positioning, we're just in the middle right there, up in a very big way from these lows right here. And if you've been following this channel, we've been saying this was the place where you actually want to, because historically, when positioning gets very light, that is the time you want to be a contrarian. And you know the S&P 500 is back at all-time highs, but this is still telling us that investor sentiment is still rather light relative to former bull markets. So there certainly is upside, and that's going to come from the foreign investors as well as institutional investors. We also know that analysts need to play the catch-up trade right now. Previously, towards the end of last year in November and December, analysts raised their 2025 price targets very close to the 6,500 area. The S&P 500 wasn't quite there, and when we normally see this type of capitulation, that is often a signal to sell. We have since seen estimate revisions being revised. The S&P 500 has ripped to the upside, and normally when estimate revisions are below the S&P 500, we tend to see very bullish price momentum. So this can take us higher, and the seasonals support that. When you look at the S&P 500 performance after a negative Q1 and then a Q2 that's greater than 10%, the average return for the rest of the year is about 17%, median return 14%, 100% of the time it's higher, although there's a thin pool of data. For anything to be statistically significant, you need at least 30 data points. However, still data we can look at. And the truth of the matter is, guys, we also have this corporate bid under stocks. Buybacks in billions is close to $300 billion for the quarter, the highest ever, even going back to the 2022, just infinite money glitch that we got from the Biden administration. So this is telling us that organic buybacks are very strong, and this will continue to take us higher. The macro also looking really good. JOLTS data came in yesterday suggesting that the labor market is in a healthy position. You could see the JOLTS data actually rose, indicating a growing demand for labor, signaling economic expansion and increased opportunities for employment. As a result of this, we saw the dollar actually drift up. And something I've been saying for a while now, guys, is that we're going to see strength in the dollar. This is something we've been seeing today. We're going to see strength in the dollar once we get this budget bill approved. It does look like it's going to pass the House. We'll see what happens. There is a chance that it doesn't pass. Nonetheless, once the budget bill gets approved, we'll see strength in the dollar. We'll see money flowing back into the economy because the Treasury is not drawing down their TGA account. And guys, Elon Musk has been going at the big, beautiful bill, the BBB, for its egregious spending. But when you actually do the math, the BBB actually cuts net spending by more than $100 billion annually over the next 10 years, but will disproportionately impact the upper and top 20% of earners. And this is why you want to get yourself in these tax brackets, guys, because the top politicians are in the top 20% of earners, and they're always going to do stuff that's going to benefit them, their donors, and their constituents. And you're going to see a lot of tax cuts, extending the tax cuts in the top 20% of earners right here. At the bottom 20% are actually pretty much going to see a tax hike. And that's because Medicare is not necessarily getting cut, but the growth of Medicare deployment is slowing, as well as the government adding work requirements to the overall Medicare base. You're going to have to do 20 hours of work or at least volunteer in your local community to go ahead and get the same Medicare benefit if you are an able-bodied individual. Now, guys, looking at the data for the rest of the week, tomorrow is where everything pans out. Thursday, we get the non-farm payrolls and the unemployment rate. This is going to be the two big numbers tomorrow, okay? So the consensus is for about 110,000 or 100,000, somewhere in between there. The unemployment rate to tick up to 4.3. The forecast is for 4.2%. We also get the average hourly earnings month over month, year over year. We're looking for a 0.3 increase and a 3.9% consensus on a year over year basis. We also get the balance of trade, which is the difference between this and this. Then you get your balance of trade number. Initial jobless claims to come in at 236,000, but this will be meaningless. Everybody's going to be focused on the non-farm numbers. And we also get the ISM services figure. Hopefully we get actually a 50 number year, see some expansion. And then we also get factory orders and a couple of Fed speakers. There's nothing in terms of earnings, but if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.